Thank you everyone for joining us for our Tax Basics workshop. I'd like to introduce our presenter. Thank you to Chris Waikoko. Did I say that correct, Chris?
Yes, that's correct.
Great. He is with Wyco Tax and is a multi-business awardee in both the United States and the Philippines. With over 14 years of experience as an entrepreneur, his companies provide accounting, tax, and wealth planning services. He is committed to promoting entrepreneurship and mental health, and he has received numerous awards, including the 2025 Visionary of the Year Dallas nominee. Chris has also been recognized by the U.S. Senate and Congress for his outstanding contributions to the Texas business community in 2018 and 2022. So I'd like to welcome Chris, the CEO of Wyco Tax, and I hope you all enjoy this workshop tonight on tax basics. So, Chris, I will turn it over to you.
Yes, thank you so much for this opportunity, Miss Julie. I really love to teach, and I'm glad that you guys are all here. And I think you're so excited on taxes. Okay. All right. So we're gonna make it interactive. Do you have a piece of paper with you? So I want you guys to have this. If you have like any piece of paper, okay. So what you're gonna do in the piece of paper, I want you to fold this into four. There you go. Yeah, fold it into four. Okay. So when you open it, this is at least in four columns, right? Now one of the column, so it's gonna be 25, 25, 25, 25%, right? So throughout our presentation, you tell me later what does the 25% represents. Okay, you can type it later on our we're gonna make it interactive and questions and answer are entertained. Is it okay if I go through the presentation and the Q&A will be later, or how does it work? What do you guys prepare?
That's usually how we do it. We do the presentation and then the students ask questions at the end.
Okay, yeah, you can I'll let me share my screen. Let me know if you could see my screen. All right, can you type one if you can see my screen? Okay, so this is our taxes made easy. Thank you so much. So made the odds. It's tax season. So made the odds be in your favor. Okay, there you go. So this is my contact information right there. If you would see it later on. Okay. So disclaimer: this presentation is only for educational purposes only. It's not intended to provide and should not be relied on for any tax, investment, legal, or accounting advice. Examples and other materials in this webinar are only for illustrative purpose and should not be relied upon for technical answers. Wyco Tax, it's a virtual outsource accounting and wealth planning company, and Wyco Tax is not associated with any institution on this presentation above. So the people that who should attend, so you just number one, press number one if you are full-time or part-time students. So that's number one. Okay, type number two if you're students with part-time income. All right, type number three if you're students who have full-time job. And then type number four if you're students who have part-time and full-time job but don't know where their money went. Okay. So that's we're always wondering where does the money goes, right? Have you ever felt that way? Yes. Type Y. Yeah, so basically my company's that's my last name. The first word is my last name, and then tax is what I provide. And ever since how did I start with the tax industry? It's because I'm a financial planner in the Philippines, and then what we really want is to make sure that from the young age, my grandmother always taught me, Chris, because my grandmother doesn't know how to read and how to write, but she knows how to count. And she said, you need to learn how to count. So whenever I was 10 years old, I helped her on her store. And then that's the time, okay, Chris, whenever we make $100 or that's 100 pesos, you always take off 25 pesos. So which means 25%. And I've been asking her, where do you put the 25%? And then she said, that is your contribution to the government. That is what you call taxes. So I was thinking that I was able to escape from taxes when I went to America. But guess what? So taxes is everywhere. Today we're talking about federal income tax. All right. So the federal income tax, this is your contribution to the government. So who has a side hustle here? I want to know what side hustle do you do? You can type on the comment section. So the side hustle means aside from your full time, maybe you work in school as a receptionist or you work in a restaurant, but you also do Uber, like on the example on the right side, or maybe you do DoorDash, eBay. So those are what you call side hustle. So it says if your money hits your account, the IRS cares. All right. So we need to avoid the trial and error approach that will cause IRS red flags. Okay, so like me, I also work from home. I do tax consulting on the side aside from my company. So that's why that's part of my side hustle. So for example, a lot of you may be familiar with this case like Gloria. Okay. So Gloria, she's a full-time student and doing DoorDash on the side. She's working as a part-time receptionist in a clinic under W-2. So what are the things she needs to keep in mind before filing her taxes? Then why is her paycheck not she expects? And we've been discussing this. I've mentioned this more than 3 times already because the money goes to taxes. All right. So in your pay stub, who among you here has pay stub? Type number 2 on the chats box. Like among of you that already saw a pay stub? All right. So if you would see, okay, there you go. So the pay stub right here, the contribution of taxes are different. The first box is your income, like how much is your wages. If you made 2,400, 20,000 in a year, so those are wages, tips, and other compensation. Okay. Now, you would see these boxes here on box 4. This is your social security contribution, right? So even you made 2,456, there you're contributing $152 for your social security. So this is for your retirement when you're reaching the age of 60. Okay, so this is your supplemental income. And then on top of that, there is what you call another Medicare tax. So the Medicare tax, this is your supplemental for your health care because at the age of 60 and up, you're no longer working. But the thing about age, the older we get, the more medical needs we need to have. So this is the type of another tax contribution that we're giving to the IRS in preparing for our retirement. All right, so this is what you call FICA. So FICA stands for Federal Insurance Contribution Act. Again, FICA stands for Federal Insurance Contribution Act. Okay. But what else are being deducted to your pay stub aside from the Social Security and from the Medicare? They're taking away also what you call the federal income tax, the 222.71. This goes to the IRS on top of your Social Security and Medicare. The 222, you may ask, but where are they going to use this money? The federal income tax. Okay. So the federal income tax, remember guys, we're talking about income tax. There's a different type of taxes about sales tax, right? What do you call when you purchase something in the store in Target? So those are sales tax. That is for the state. What we're discussing right now is for the federal level. All right. Just make sure that we are all on the same page. So the taxes, why taxes exist? So the taxes are being used to fund the people and company pay to the government. So that is our contribution from our personal income tax, from capital gains, estate, property, or corporate income tax. So where the taxes go, it's been used to federal, different education, Department of Education, Department of Agriculture, Department of Commerce. So they're using that money in able to fund the different branch of the government. And by the way, interesting facts. Did you guys know on the right side that the cowboy boots are tax free, but the hiking boots are being taxed? So we're talking about the sales tax. The reason why, did you know why? So the reason why they said the cowboy boots, it's only in Texas. It's tax free. They consider that cowboy boots because we are in the cowboy state. They said that boots is a necessity. Okay, but the hiking boots is like a luxury. So that's why if you guys are going to give something a gift to your uncle, to your dad, so maybe you can save buying them a cowboy boots. The more we know. All right. Okay. So moving forward, so going back to Gloria, who among you here already receive a W-2? Yeah, type number three. If you receive a W-2 before, just type number three. Okay. All right. What is the difference of W-2 and 1099? Remember, when you are W-2, automatically you are considered employee. Okay. So what are the classification of employee? The people that are employee, these are on payroll. So now the employee pay less tax because the 50% of the one that we discussed about the social Medicare, those social and Medicare, half of those contribution are being paid by the employer. Okay? Right? Now, taxes withheld from paycheck. So every 2 weeks, typically every 2 weeks, employees they are taking out. Your employer is already taking out your Social Security, Medicare contribution, and federal withholding. Okay. The only problem after 2018 administration, they remove any deductions for employees because before there are employees that can deduct work related expenses like this. They said if you're a teacher, you go from one school to the other city, you can deduct those gas expenses, your uniform, your licensing, and home office deductions if you're employee. But after 2018 they took it out. Okay, so there's no more expense deduction. But the good thing, you're also eligible for unemployment. All right. So these are the employees category. So that's why you can type on the chat box before you start a job. The form that your employer will ask you to fill out is what you call W-4. All right. Do not get confused. W-2 is the end of the year you receive it to your employer, the total compensation they paid you. But before you start, you're filling out a W-4 form. Okay, the W-4 will allow them, your employer, to know how much tax they will take it from you because single tax rate is different from married tax rate. So that's why it's important for you to know to fill out the W-4, and that will indicate how much tax you will get based on your status, whether you're married filing separately or whether you're single or married filing jointly. All right. Okay, on the other side, Christopher, what is on the other side? This is the opposite of employee. This is what you call independent contractor. When you're an independent contractor, who among you here, type number 4 on the chat box, who among you here receive a 1099 already? Okay, just type number 4. So when you're 1099, you control your time. You're not an employee. So these are example of DoorDash, Uber, uh, Airbnb. Those are the 1099, or sometimes even the waiter, they're receiving so many tips. So those are example of 1099. Why? Because your employer, they don't contribute on your tax rate, your Social Security and Medicare. They don't pay any of those because they will be. You are the one going to be um, liable to all your taxes at the end of the year. However, you can deduct business expenses. So if you notice this one, the employer contribute to your Social Security Medicare taxes, but you cannot deduct many expenses. But on the other side, the company you work for or your clients in DoorDash, Uber Eats, they don't contribute on your Social and Security and Medicare, but the IRS allow you to deduct business expenses. So, for example, Gloria made 20,000 on just driving, but she spent mileage 10,000 on gas, insurance. So at the end of the year, even she made 20,000 on Uber Eats, DoorDash, but she has a 10,000 on expenses. So therefore, she's only liable on 10,000 taxes, right? And that's the other thing here. It's not always eligible for unemployment. Okay. But question, when you start working as a freelance, we call it side hustle, freelance, independent contractor, subcontractor. When you started to apply for this 1099, the client that you work with or company that you work with will ask you to fill out the form. What do you call that form? So write it down on the comment section. They call it the form W9. Okay? So remember, W9 is when you start with your 1099 and W4 is when you start with your W2. So the W9 established the relationship between you and your company that you are an independent contractor of them, that you're paying your own taxes, full amount of taxes you're responsible for, and at the same time, you get all this business expenses as your eligibility while working for the company, whether it's Uber, Airbnb, all those side gig, and even you're a freelance artist, singer, director, model. So all of those fall under 1099. All right. Moving on. So whenever you're doing your taxes, the combined income that you get from 1099 and W2, this is what you call gross income. Okay, please write this down. The gross income is what you call the total income. Okay, gross income. For example, Gloria received 100,000 as a receptionist and another self-employed of 107. So her total gross income is 207,650. Okay. Now, so after this one need to be reported at the end of the year. So we're going now to different terms on taxation. So this is on the very top of your 1040. Okay. Now, my question is the gross income, when type yes or no, Y for yes or N for no, is the gross income the tax that the total income that you will pay to the IRS? Just type yes if you think that 100 that the gross income is subject to tax already, or no if it's not yet the total income subject to tax. Okay? So just type yes or no. So the answer is no. Okay. The reason why is because even if it's a gross income, we're going to go, the IRS allows us with some sort of deductions. All right. And that is what you call standard deductions. Okay. So given an example with Gloria that she made, let's say for her W2 and 1099, she made all in all 30,000. Okay. Out of that $30,000, if she's single, that 30,000 will still be lowered by what you call standard deduction. Okay? So that's 15,000. So 30,000 minus 15,000, she's only going to be liable paying taxes on 15,000. Okay? But question, you can type how much taxes if Gloria got married somewhere on December, right? She got married with Carlito, and then she still made 30,000, right? So how much would be the standard deduction for them when they file together? Is it 30,000 or is it 22,500? Yeah, you can type it in the chat box. Okay? So the answer here, when they're married, if Gloria got married before the end of the year, their standard deduction automatically goes up to 30,000. So guys, if you remember a while ago, there's no more employee deduction. But did you know even there's no more employees expense deduction that begins 2018, what the administration did, they double the standard deduction. So what they're trying to say, you don't need so many receipts for your expenses as employee. What we're gonna do is going to double your deduction. Before 2018, the single, they only allowed to have 7,500 on standard deduction. But in 2018, they made it 14,000 and now 15,000. So that's why even though there's no more employee expense, they double the standard deductions, which means you no longer need the receipt. Okay. However, if it's if she's not married, let's say Gloria is not married, but she has a kid, okay, she has a kid that she support, then that is what you call head of household. So the standard deductions given to her is 22,500. So if Gloria made $30,000, then therefore minus 22,500, her adjusted gross income is somewhere 7,500. Okay, so that's how the calculation works. Okay, hope you can follow. Press 5 if you can follow. Okay. Now, when you subtract the gross income and deductions, that is what you call adjusted gross income. Okay? So the AGI, this is the result of all the deductions. So that's why you still get, aside from standard deduction, there's a student loan interest. If you guys have student tuition fees that you're paying after you graduate, certain tuition fees, if you have IRA contribution, self-employment taxes, this is what I mentioned about the 1099, that they have self-employment taxes, and then certain business expenses, also alimony. If there are parents, they're paying alimony, and qualified educator expenses. So teachers that are buying, I think, as much as $300 in a year, that's another part of deductions on top of the standard deductions. All right, there you go. Next, on top, once the AGI has been computed, this is another good news for students. Can you type number 6? Who among you here are still or did receive any of this? We have the American Opportunity Tax Credit on lifetime learning credit. So these are the two credits eligible for students. Okay, let's do one by one. For the American Opportunity Tax Credit, all right, this is the maximum credit is 2,500. Now the lifetime learning credit is $2,000. Okay. Then refundable, the only thing refundable to the 2,500 is up to 40% of the credit. However, the lifetime learning credit is not refundable. Okay. We're clear with this. And then for people that are filing single, the income limit, you can qualify for these credits if your income does not exceed, or your modified adjusted gross income does not exceed 90,000. So the same thing with life learning credit. That's why some of my clients have become doctors and nurse practitioners, and they told me, Chris, why I don't have the credit? Because I told them that you already exceeded the income. And then she made 250,000, and then with her husband, that's another doctor, they made 500,000. So that those credits are already paced out. Mhm. All right. So the dependent status. So a lot of students, if you are living with your parents and your parents are paying more than 6 months of your expenses, okay, and they're supporting you financially, you're not the one claiming this credit. The credit goes to your mom or to your dad or both to your parents, because they will be the one claiming you as a dependent as long as you still live with them, or as long as they're paying for your bills 6 months in a year. Okay. Then the eligible programs. For the American Opportunity Tax Credit, the student must be pursuing an undergraduate degree or other recognized education credential. On the other side, the eligible for the program under lifetime learning credit, a student does not need to pursue a degree or other recognized education credential as long as they are enrolled for one or more courses. For the American Opportunity Tax Credit, at least half time. Okay. And then the limit for American Opportunity Tax Credit is only 4 years. So on the lifetime learning credit, it's unlimited. The only problem, let's say, there are nurses that came here in America already from Philippines. So since they graduate 4 years already, they are no longer eligible for this American Opportunity Tax Credit. Now, if they're pursuing being a doctor or advanced learning doctorate degree or nurse practitioner program after the 4 years, then they can still qualify with the lifetime learning credit as long their income does not exceed 90,000 for single and 180,000 for married filing jointly.
So, Chris,
Okay? Yeah, go ahead.
I just want to stress to the kids this is important because if you get Pell Grant, then most likely you're under the income limit, which means your parents need to know about this if they're claiming you on their taxes. If you're claiming yourself on your taxes, I don't think many of our kids are claiming themselves yet, but they will soon start doing that. Um, Make sure your parents know about this because a lot of people don't realize it. So, especially if they're doing their own taxes. So, our kids would qualify. So,
Yeah, Julie, that's a very good observation. The reason why so many parents there's really a misconception about this when they said, oh, like the parents that went to me last month, this is common, this is very very common problem or issue that they're missing. Chris, the kids are already 18 years old, right? So they did not claim the credit last year because the kids were 18 years old last year, and they said we're no longer going to claim them as a dependent. And then the further I assess them, the longer the deeper I knew that they missed this credit. Why? Because they said, oh, they're already 18, they're making their own money, they're live with their in the dormitory. And then I asked them, wait, did you support them like 6 months? And then yeah, we pay for the tuition fee, 6 months board and lodging, right? And then okay, do they have a spouse already? No, that my kids are no, they're single, right? And they're not even making 5 or 10,000 in a year. And then the other question, I said, if the, did you get the 1098 form? And they said, oh, we got the form. Okay. So guys, when you guys have all of those, your parents should claim you because the credit will not be given to you if you're not paying more than 6 months of your bills. Okay. So there's a due diligence question. You have to remember that this credit can be claimed between age 18 to 23 years old. Okay, as long as more than 6 months student and your parents are paying more than half of your bill. Okay, always check that 1098T. That's the form that's being released at 1098 tuition fee statement. You can access it in the portal. But can we do a correction? The answer is yes. So if ever your parents miss this, we can still go a correction until the year 2023. Yeah, the year 2023, if some your parents miss this credit, they still need to do a correction before April 15 this year. Because after April 15 this year, it's gone. They can no longer get this money. All right. But thank you for that information. All right. So this is the real example for Gloria a while ago in our case study. So for example, Gloria's W-2 income is $30,000. She's single, full-time student, and she has no dependent, and she's already, she live by herself. She paid more than 6 months of her bills. How much money can she get back? If you would see here on income, 30,000, that's her gross income. Standard deduction is $13,850. There's a 16,150 on taxable income. This is what you call the adjusted gross income, and then she paid 1,718. All right. So remember, this Social Security and Medicare, these are not refundable. We're just aiming the 1,718. Okay. But since she has an American Opportunity Tax Credit that she's eligible, so that 1,000 will be added on 1,718, and the 1,000. And together with the other credits, her total refund is somewhere $4,000. So she can get $4,000 back on the total credit from American Opportunity Tax Credit and the taxes that she paid to the IRS. All right. So this is a sample computation on how much refund she could get on her tax return for 2025. All right. What are the common tax mistakes? Okay. So the different common tax mistakes are number one, missing ineligible credits or deductions. So we talk about the education credit, filing taxes late. So on the comment section, when is the deadline of filing taxes for personal return? When is the deadline? You can put it on the comment section. All right. It's somewhere on April. And then another is not reporting all income. So whatever income you have, 1099, W2, you always need to put it together. Okay. You always need to make sure all the 1099s and W2 need to be submitted. There's another question. What if they get paid cash? So this is common also for people that are doing housekeeping, babysitting. So they got $1,000, but they did the parents of their friend, they did not give them 1099. The Do they need to report the cash income? Okay. The answer is yes. You still have to report your cash income, even you don't have 1099 and W2. Because this what happened in California. She used to be a babysitter for the family since for 5 years, and then they agreed before. Well, we're not gonna report your income. Like they're in California, they've been paying. We're not talking about 10,000. She's been receiving 50,000 a year, and they said, let's just pay you cash. You don't need to report it. But what happened was the family then later on reported that 50,000 income to her, to my client, and now she was in trouble with the IRS for 5 years because she did not report the 50,000 a year of income as cash. And the problem, what the family did, they submitted the receipt that she's receiving cash to them, and then she has a log in, clock out, like whenever she takes care of the senior, their grandparent. So that's why the IRS went after her. So I highly recommend whenever you're receiving cash, you always ask for receipts or invoice. It's better to be safe than sorry. And then you're not keeping proper records. Okay. So always make sure two things. Whenever you're receiving side gig, I don't like cash, to be honest, either income or expense. I always use credit card or debit card, Venmo, PayPal, Zelle, all of those. So in because there's a 3-year audit period when you're declaring expenses. For those people of you receiving 1099, there's a minimum of 3-year period, but it can last next to 7 years. So the record keeping should be between 3 to 7 years. Okay, so you could always download the receipt tracker. There's QuickBooks receipt tracker. You could always use that to save all those paper receipts. And the QuickBooks is a good tool that we're using. And then incorrect amounts on return. So that's why do not estimate. That's why I don't like cash because it's so hard to track. So whenever you have to add all your income from your W2, from your 1099s. Ignoring tax advantage accounts. These are eventually you're gonna get there when you are opening your 401k. The other one is health savings account. So guys, any money that you put on your 401k or your health savings account are offsetting your taxable income because those retirement money, let's say you put 15,000, let's say, out of 100,000 of your income. So instead of you being taxed on 100, there's already 85,000 of adjusted gross income because your 15,000 you put it to your retirement account. Okay. Then another thing is rushing the tax filing process. You could always file an extension if you think you cannot make it. But the question, when is the best time to file the extension? I always suggest the best time to file an extension is by February. Do not wait until April 15 because filing an extension, you can do it online for free. Okay. So at least even though you miss April 15, you are sure that you're not going to pay penalty of not filing on time. All right. And then lastly, I think right now you avoid this mistake is you're seeking professional help. So many people they do it trial and error. So right now education is the key by planning on taxes. Not seeking professional help is number one problem with others that they thought because their parents they did not file their taxes they thought it's okay not to file taxes. Okay, it's not. It's always have recommendation even though you're only making less than 10,000 or 5,000 still file your taxes because eventually if you decided to apply for a student loan or you would like to purchase your own house, the usually the banks are looking for the past 2 years of tax return. All right. So my final message, keep more of your money by learning taxes and let them the IRS work on your advantage. Okay, thank you so much for that for this time.
That's
Okay.
great. We have some good questions. Do you want me to read
Mm-hmm.
them to you or do you want to go back and look at them?
Oh yeah, if you could able to read it to me, I would appreciate it.
So, first question was those, I believe you were, Isabel, you were talking about the tax credits for students. Does that apply to PhD students too? So, like if they're going to be getting a master's or PhD, can they use those student credits?
Yes, the one that applies to PhD as long as they should the PhD a lot of those questions they will be asked if they're done with their 4 year if they already took the 4 years. If there are they've done with the 4 years, then the American opportunity tax credit no longer apply to them, the 2,500. However, the 2,000 credit still applies to them. But remember, this is not a refundable credit. So, for example, what's going to happen if they pay, let's say they made no, not 90,000, it should be less. Remember, it should the PhD if they're going to file their taxes, they need to make sure they're not making more than 90,000. So if they made 90,000, those two credits are gone. Okay. This only applies for those PhD that are not making 90,000 a year. Hmm.
Thank
That's a
you.
good question. Okay.
Next question. So this is, if a student pays all of their bills, should they be filing themselves and not letting their parents file for them? And then the student says, I was thinking about filing with my school. Not sure
Yeah.
what.
They're welcome to do so. They are qualified to be them filing by themselves. Because remember, guys, when you file, by yourself, if you're familiar, there's a question there: are you being claimed as a dependent? You have to answer no, because if you're already paying more than 6 months of your bills in a year, then you should be filing as independent as your own, and indicate on the tax filing that you are not being claimed as a dependent.
And then they need
What?
to clarify with their parents that they're doing that, right? Because
Yeah,
could it be an
yeah.
issue if the parent claims them and then they're filing as a dependent or independent?
You have to make sure you let your parents know that you're not going to be claimed by dependent, guys, because remember, your parents, when they've been claiming you for the past years, they automatically have your record. And if they're filing the tax return to the same person or to the same company, your information is already passed on for this year. Okay. And the people said, oh, we're no longer claiming her as a dependent. But when I check, let's say, for example, Isabella, and then I check the parents' return. Ma'am, Isabella is here. And well, I did not claim her as a dependent, ma'am, but did you see that she's still a dependent on your return? And then they made the big correction that takes another 3 months. So you have to communicate this clearly, especially for people here that first time being by themselves. Okay, because your records, your birth date, your social security is automatically transferred for this year for your parents. Make sure that your name is not there.
So if the
Okay?
parents claimed them last year, it's automatically going to transfer that student's information to this year. So the students got to go to them and say, no more. I'm claiming myself this year.
Yes, yes, you have to communicate that very well. And also, if you're filing on your own, make sure to answer you're not being a dependent of someone else. The reason why your refund will be cut into half if you put there that you're still being claimed as a dependent.
Okay. And then, Shago, did that answer your question? Let us know in the chat if that answered your question. I'm going to go on to the next one. So if a parent's taken out a plus loan, can the parent can use that as a deduct the interest as a deduction? Is that correct? And then the student can't though, right?
Yeah, it's only one who can use the student interest deduction. So if the parent apply for the loan on your behalf, then the parent can use those as a student deduction.
So if the student has taken out loans though, can they use that for
Yeah,
them?
you can use it. But remember, even though you use that interest, student loan interest, remember how much is our single standard deduction? They're giving you 13,500, right? It's okay for you guys to put that student interest there. Maybe it's a 500, $1,000. However, if the at the end of before you file your taxes, the IRS will calculate which is higher. Is the student interest higher than the standard deduction? So whichever is higher, the IRS will override. If the standard deduction is higher, then that 13,500 will be used. But student interest will just gonna be there as on the back burner. Okay.
Okay. We have another. If we are still dependent on our parent, would we need to provide just the W-9 form when filing?
That's a good question. Um, no matter what so W-9 is when you start a contract with someone. At the end of that contract, the company or employer, I don't call it employer for technicality because employee is employee relationship. When you are filling out a W-9, you are a freelancer. Okay? When your W-9 is being you submit it to to your company, whether it's DoorDash, Uber Eats, you're filling out W-9. That W-9 is not being submitted to the IRS. That W-9 is being submitted to Uber, to DoorDash, okay? You don't need that. You don't give that to your parents. You give it to the company that you're going to work as a freelance, okay?
You'll do a 1099 if you do
That
a W-9. If you give a
very good.
W-9 to DoorDash, you're going to fill out
Mhm.
a 1099.
You will receive a 1099 at the end of the year.
And you
All right.
still do your taxes, even if your parents are claiming you because you worked as a contractor or a freelancer and you need to do taxes with a 1099.
Very good. That's correct. So your 1099, guys, your 1099, your W-2, you don't report it with your parents. Even if you're being claimed as a dependent, you're the one going to file it on your tax return, and you just have to put there your 1099, your W-2 all together on your own return, but you just have to put that you're being claimed as a dependent. All right. You're going to do a separate filing, but again, whatever refund you're gonna get, it's only 50% because you're still a dependent. Your parents still include you on their tax return. That's a good question.
So, can I ask a question on top of that, just for clarification? Because I have three college kids, and they, for years, were working in high school, but they weren't making a lot. They were making, part-time, and they weren't making enough to basically meet the requirements to file, I think. So they didn't file taxes. It would have behooved them to file,
I
right?
would I would recommend for them to file not because they want to get a refund, but like on the purpose other people I would bump into is because they are applying for something. I don't know, they want to purchase a car, they want so
Your
all of
credit.
those.
It
Yeah,
actually could help your credit.
yeah, it also helps your credit. So the tax filing is not just to get a refund, but it also help you, whenever it's part of documentation when you're trying to purchase something. Like people that like to buy a house or they run those credit because they are not credit the tax filing because right now the IRS don't real the company that you're going to purchase a house they always look on the tax transcript. They don't look on your on the piece of paper that your tax preparer did, they always look at the back door of the IRS.
So it shows that you have a history of working. It just shows longevity of responsibility.
Yes, even people that are looking for financial aid, they look for that for those students. That's true. So even if you don't need it, just file a tax return. It's not gonna hurt.
That's really good information. I learned
Mhm.
something new there. Do you have for if kids, if you have more questions, go ahead and type them in. Are there is QuickBooks free? What
I know
program do
there's a
you
free
use?
version. Yeah.
There is a free
I
version.
know there's a free version. I know there's a free version for certain expense or income only. But I know well, TurboTax allow you to file for free. I just don't know on QuickBooks if there might be a free trial for 3 months. Then after that they would
So
have
you
a
mentioned like a program that they could track their expenses and receipts in. Are
I
there any other can they find free programs to like keep up with their documentation online if they look?
Yeah, I don't know if there's free. I know they let you. I think they let you use free trial for the first month, and then they will charge after that.
So, but they could keep like a spreadsheet or a Google Doc if I know
They
Isabella does.
Yeah, they can, but the IRS always. I did work with a IRS auditor, and they look for the physical or electronic copy of the receipts. So even if it's an Excel sheet only shows you the consolidation. But at the end, let's say what the auditor is looking, if they see, let's say, purchase $1,000 in Walmart, they need to see the actual receipt. Out of that 1,000, what is the breakdown of 1,000? Right? Is it all office supplies? Are there food included, milk? So they only going to consider portion of the office supply out of that 1,000. It could be 250, $300. So that's why even you guys have an Excel sheet. Like Excel sheet, but they will look for the actual physical and or electronic copy. I do recommend electronic, like what I've said before, because the physical copy, what have you noticed to the printout? When it's stuck on your shoe boxes for months or years, they started to fade away. The
So,
number.
like, you could take a picture of it, put it in a Google Doc, and then in your Excel spreadsheet, you could link to it.
That would be great. That would be great.
If you're like, have all the time in the world to be
Yeah, if
organized.
you have that, you have time in the world. But I know there are other. I think receipt tracker aside from QuickBooks Company, there are other things that you could our app right now that you could use. Even your cell phone, you have a camera on your cell phone. Just take a picture. It even has a scanner, like for iPhone.
Mhm.
Mhm.
So we have another question. So my question was pretty much answered, but what are the best affordable sources for filing for the first time as a student with professionals? I know TurboTax is
TurboTax is
free.
free.
Okay, but
Mhm.
I think the free version is to self-file.
Self-file, yeah. I know if it's for student. For me, I highly recommend TurboTax. It's very user-friendly. But when you go to the IRS website, there's always free tax USA.
Okay.
The only thing I don't recommend, because the people that sometimes there, it's seasonal. What I'm saying, they're not as sophisticated as TurboTax, because the TurboTax you have the past years, they're very advanced and sophisticated in terms of filing. They even automatically read all the numbers on your W-2 and 1099s, and you don't need to do a lot of data entry. So for me, my gold standard is really still TurboTax.
Okay. And I know a lot of our kids do use TurboTax. Now, Chris, if they wanted to go to a professional, um, are there like affordable professionals out there?
I On the IRS website, you just have to type a free tax preparation near me. So go to the irs.gov and find pre-tax professional or tax office, and it will give you listing on based on the zip code.
Got
you
it.
you have to make sure, guys, go to the IRS portal itself. Okay, do not go with those people that. Be very careful. Okay, guys, be very very careful of those asking information on the website to put your full name, address, social security. Do not put that. Okay, if there's no irs.gov, just go to the irs.gov, because people are stealing information. You have no idea. There's a scammer that even called me and emailed me, and they're collecting money from me, and they not knowing that I'm an IRS. I work, I'm an IRS agent. I so just be careful. They can be intimidating, and then uh, even your Facebook Messenger, guys, do not fill out any form. Even you are some people here, Julie, they even said you are verified by Facebook. You want to start making money, whatever, and then they easily showed you to fill out your name, your address, and your birth date. Report those. Just be very very careful. RS don't send emails. They don't call you. They send you letter before they even communicate with you. They always have letters. Okay,
Or in the mail.
on the mail. Yes. So if you're suspicious of something, you can check their tax company on the RS portal.
Okay, let me go
Hmm.
back and make sure we got everybody covered. Does anyone have any other questions before we thank Chris one last time? I love the fun fact about the cowboy boots. I'm going to use it.
I know. Me too. By the way, before we forget, okay, so the piece of paper, it's better late than never. What is the 25% on the piece of paper that you folded? This is what you call taxes, okay? So, in other words, if you work for 1 year full time with your company, basically 3 to 4 months of your salary go to the IRS. So you have to learn taxation, and it can work on your advantage.
So remember that
Educate.
when you're budgeting.
Education is key. All right.
It's very important. This was very insightful. We appreciate this so much, Chris. Thank you.
Thank you. I hope you guys I didn't get bored. I hope you didn't get bored. It's, people get bored on taxation, but I love taxation.
It was great. I learned a
Mm.
lot, and I'm over 50. So I hope
Yeah.
kids did too. I think they did. It's a good place to start. So we really appreciate it.
Thank you so much. And remember, Julie, even Albert Einstein, the most complex things that he cannot learn is taxes. So, I, so that's why there's no excuse. It's always Oh my God, Julie, it's always every year they always insert something new. The 2 years that you know from taxes might not be the same concept that you know. This year is the overtime. They give us a deduction for overtime. So that was not there last year. So every year there's something new.
Always changing.
Mm-hmm.
Well, thank you. And thank you, kiddos, for students for popping in tonight. Tony will get you an email to let you know you've got your workshop credit. Okay?
Thank you so much, Julie, and pleasure to meet you, everyone. And have a good night.
Thanks.
Bye.
Take
Thank
care.
you. Thank you.
Bye-bye.
Stay safe. Bye bye.